Hello and welcome to this week's Trading the Trend on Wednesday, the 8th of March. Now, we've got several positions on at the moment. The first being short on WTI, and we were short here, and the trade worked out quite well from mid-February onwards. But then we had a rally in the price of crude oil, and if you used our stops on a breakthrough basis, then you would have been stopped out on that trade at $80.76 at the February high. But if you use your stops with regards to a daily close above this level being made, then you're still short on this trade. And in that case, I would move my stop to above yesterday's high at $80.99. But short term, it looks as if further downside is in store with regards to the price of crude oil. The other trade we had on from 2 weeks ago was to go short the NASDAQ 100. That did continue to slide, but we then had a reversal of this 200-day simple moving average, take us all the way back up again towards 12,467. Now, since our stop is at 12,896, we should perhaps lower it to that high, 12,467, because if we were to go above that level, then further upside is likely in store. At the moment, we're falling because of hawkish comments from the US Fed Chair Jerome Powell yesterday when he did his testimony to the US Congress. And basically, those hawkish comments pushed US equity markets lower. So for the time being, further downside may be in store. But I think we should now not only move our stop down on this short position, but also make it a stop and a reverse order. So if we were to get stopped out, we would then go long in the NASDAQ 100. Another trade we've had on over the last couple of weeks is to go long dollar yen. We did so around 135.50. And because that market has gone sideways and then I was going up again, I would like to move my stop loss from 129.80, I believe it was, to 135.50, making this a free trade going forward. And it looks as if further upside is likely to be seen on those hawkish comments with regards to the US dollar. And this week's Trading the Trend is to go short the Australian dollar versus the New Zealand dollar. And we had the Reserve Bank of Australia out on Tuesday, and it hiked its rates to 3.6%. And indicated, though, it might not continue hiking its rates in the future. And basically on the back of that, the Australian dollar continued to weaken, and we expect this to also be the case over the next few weeks. So we could go short the Australian dollar versus the New Zealand dollar at current levels at 107.87, with a stop loss at 109.50 and a downside target at 105.50.